Hello, and welcome to our webcast. I'm Carly Miller with Moss Adams, and I'm going to be getting us started for today's session, Evolving Provider Relief Fund Reporting and Audit Requirements. Before we begin, I'm going to start a brief housekeeping video.
Welcome, and thanks for joining us. We're pleased to present another in our ongoing series of continuing professional education webcasts to help companies and individuals conquer challenges as they plan for what's next. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget to the right of the slide view. You can ask our presenter questions during the webcast by typing a question in the Q&A window below the slide view and clicking Submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% of the polling questions, which we'll ask throughout today's presentation. To respond to a poll, click the button next to your answer. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget to open a PDF file that you can save to your computer. Don't worry if you can't download your PDF certificate today. We'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our attendance sheet to receive CPE credit. The attendance sheet is available in the slide deck and handouts widget. Please have all group members sign it and send only 1 sheet per group. Also note that CPE credit can be awarded only to participants registered as themselves and isn't available to participants who view the on-demand version. As a reminder, the presentation you're about to see isn't legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
And now I'd like to turn it over to today's presenters. Aparna Venkateswaran, Senior Manager at Moss Adams, Melaney Scott, Senior Manager with Moss Adams Consulting, and Georgia Green, Manager with Moss Adams Consulting.
All right, thank you, Carly. Hello, everybody. Thank you for joining us today. Definitely have a lot of information that hopefully will be helpful to you as we go through this. And we're going to dive right into the agenda. And I realized I just started speaking. My name is Aparna, and with the agenda, what we're going to cover today is we're going to kind of go back through high-level summary of the Provider Relief Fund required reporting process. As you all are probably painfully familiar with, there's been a lot of changes, a lot of FAQs that have been released, and so kind of address some of the key FAQs that have been released in the last couple of months, and also some of the common questions that we've encountered as we've had discussions. We'll also go through in a little bit more detail the audit requirement and what some of the expected guidance might look like. And then we'll just wrap up with some best practices and resources. And then if we have time at the end, we'll hopefully try and get to Q&A. Please do submit all of your questions. We'll do our best to answer as many of them as we can during the webcast. If we cannot get to your question, we will definitely make sure to follow up with you afterwards as well. All right, to start us off, wanted to jump right into the first polling question. So we just wanted to get an idea of our audience today. So what entity type do you represent? Your options are provider, clinic, hospital, tribal health, skilled nursing facility or long-term care, other healthcare provider, or other non-healthcare provider. And, give you a second to respond. And I know we just covered this in the intro video, but just as a quick reminder, be sure to hit submit to make sure your response is recorded, and making sure you get to at least 75% of the polling questions that you get CPE credit. All right, Carly, are we getting close?
There you go. There are the results.
Great. Thank you. Okay, looks like we have kind of a variety of attendees here, a little bit, primarily looks like from our hospital sector, but we have some representation from the other groups as well. All right, welcome everybody. So before we dive into the details, just as a reminder, especially with the Provider Relief Fund, you know, there's been so much that has changed, so much that has been superseded quickly with updated information. So just as kind of words of caution, you know, everything we're talking about in the webcast today, it is based on information we have to date, and it could be subject to change depending on subsequent guidance. So just want to make sure that everybody's on the same page there. In terms of some of the other cautions, just deadlines, there's, again, there could be or has been a lot of moving parts to the deadlines that have been released by HHS. There could be potential extensions, so just a lot changing and evolving quickly. You know, definitely recommend making sure that at your organization there is, you know, a communication process in place to ensure that everybody that needs to know what's going on with this program, you know, is staying current on the information. And then lastly, you know, just as much as can be documented real time, we'll share some more specific best practices around that. But the more that can be documented kind of real time, you know, the better and more helpful it is down the road when the reporting needs to happen or when the audit needs to happen. All right, so with that, I'm going to turn it over to Georgia.
Thanks so much, Aparna. So hi, everybody. Thanks for joining today. So we are not going to go in detail in the background of the Provider Relief Fund. We're assuming you're coming to the table today with some knowledge of it, but, you know, just to say we have done a prior webinar and can certainly, you know, help you understand the distributions you've received. Just very quickly, you know, it's a $175 billion fund that was authorized through the CARES Act, distributed by Department of Health and Human Services in various distributions since April 10th. And each distribution has its own terms and conditions, which you should, you know, download and understand. Probably the most important of these is that the funds are used to prevent, prepare for, and respond to coronavirus, that there can be no duplication of funding from other sources, and you'll see that across all the different federal awards like FEMA or coronavirus relief funds from the Treasury Department. There's some limitation to patients' out-of-pocket costs, to an in-network rate, and also a salary rate cap of $197,300 per year. And that's a rate, so you can't pay someone a higher rate than that with these funds. You can still pay them more than that, just not using this award. So, you know, we certainly can help you work through compliance and tracking and all of that, but we've done that on a prior webinar. So I want to talk mostly about reporting today. So our reporting information comes mainly from this post-payment notice of reporting requirements. It's been updated a few times, most recently on November 2nd, as well as, you know, a 50-plus page FAQ document that gets bigger and bigger every week. So, you know, we'll convey some of those FAQs to you today and how we've worked through them with clients as more unique questions come up. So of all the distributions from the Provider Relief Fund, there are a few that are not included in the Provider Relief Fund reporting that we're talking about today. So the nursing home infection control, the RHC Rural Health Clinic testing distribution, and money is received through this HRSA uninsured program where you submit claims for uninsured patients and get paid at Medicare rates. Those each have their own separate reporting process. If you received more than $10,000 in the aggregate from HHS, then you are going to be required to do this upcoming Provider Relief Fund reporting. So here's our timeline. So the initial reporting period is calendar year 2020, January through end of December. And what we know today is that the portal is anticipated to open on January 15th. So coming up in exactly a month, and anticipated to close on February 15th. So that's our window when we're going to be submitting data. And you'll be reporting on your expenses and lost revenue and other data elements through the calendar year 2020. If you use up your full award at that point, then you're done. You've done your final reporting. If you haven't used it up, that's okay, because there is an additional 6-month window to use up those funds, January through end of June, June 30 of 2021. And then final reporting will be due on July 31st, 2021. Is this timeline set in stone? No, it could definitely get pushed back and changed, but this is what is in the guidance right now, and this is what we're working off of and orienting toward. So you'll see in that reporting guidance document, there are 4 different sections of data that you're providing. The first section, demographic data, is really easy. You know who you are. You'll be able to fill that out. The kind of important parts are in a 2-step process, and the first step is related to your expenses. So the expenses, they're looking at this in 2 broad categories, and then various subcategories underneath those broader categories. And if you receive less than $500,000 in awards, you report the data just in the 2 broad categories. If you receive more than $500,000, you'll report data in the subcategories. And these categories are general and administrative and healthcare-related operating expenses. The most important thing to understand when we're thinking about expenses, and what language we see over and over in the guidance and FAQs, is that the expenses need to be attributable to coronavirus, and another source has not reimbursed or obligated to reimburse these expenses. So that gets back to the duplication, but also, indicates that if it's something that, ultimately the patient is responsible to pay for, or some other grant or award pays for, it's not something you would include as part of your PRF award. And I think there's definitely a lot of room for interpretation in here, and definitely good to consult with someone about looking at our expenses. How do they fit into these categories? Melaney, did you want to weigh in here as well?
Yeah, so thank you, Georgia, and good morning or afternoon, everyone. So, when we think about this step of these reporting out the expenses, and I'm going to also say and go as far as to say expenditures, because some of the items really will fall onto maybe our capital purchases. But when we think about this, it comes across as a little bit innocuous until we start reading down on HHS's definition of what is reimbursed and is not obligated to be reimbursed by another source. And really this mention of these incremental COVID-related payments. And we've had a lot of questions about this, and HHS even has some FAQ responses that provide some detailed examples of how one could go about calculating these incremental payments. And really want to take a step back for a second and think about this, that when we contemplate the reporting guidelines as they're currently outlined in this November 2nd document, it really has the feel that we're going to calculate our expenses that have not been covered by another source and report that out into these kind of bucketed areas under the G&A and the healthcare-related expenditure side. And so when we look at those FAQ documents, there's some things to keep in mind, and that is there's some keywords when we're either talking about, say, financial reporting or even federal programs, and that is when we see the word may or can, that most often lends us to be an option. It's a choice in how we go about it. And when we look at these detailed PRF examples, they do use the terminology of can with those. So that would lend itself that that's an option for an entity to go to that level of detail of calculating what HHS has said is these incremental payments. But that does not mean one has to get to that level of detail to look. In theory, really that's all captured when we're just the nature of calculating the remaining expenditures that have not been covered by another source. So just encouragement to take that with it is and look for those terminology pieces as well to discern, is this something you have to do, or is this something that's a choice that you have? And of course, always considering when we have a choice, look at our cost benefit for that choice. Some of the other terminology to look for is should and must, or I should say should or must. Those words mean we have to do it that way. Most often, very rarely do we see a should or a must when it doesn't mean we have to. So that's another thing to look at is what are those elements that says we should or must do it, and we want to make sure we follow that guidance. One other piece to note is quietly, late last week, HHS provided on their website a one-page document that is a discussion around allowable expenses. And like I said, this was really quietly posted. It doesn't stand out on their website, so we can help point you to this document if you're interested in finding it and having a difficulty. But two key pieces that HHS has included on this one-page document, and that is two questions to ask yourself when you're considering if an expense is allowable under these provider relief funds. And it's good terminology to think about this allowable piece because that bridges us over to thinking about the audit requirements that Aparna is going to talk about a little later. But these two questions is asking yourself, is this expense necessary and reasonable to support patient care efforts, to prepare for, respond to, and prevent coronavirus. So terminology we've seen quite often, but think about that in that context is reasonable and necessary, related to patient care, and preparing for, preventing, and responding to coronavirus. And the second question to ask ourselves is this expense incurred consistent with our policies and procedures? And this is a really important piece of it. And one might think that, well, we're talking about kind of a federal grant, so what does really our policies and procedures have to do with this? But it's really super important because if we think about it from the government's perspective, the risk is considering expenses or expenditures is that we're going to over-report those expenditures so that we can show a higher utilization of these funds. And so it's super important that we follow our policies and procedures because in theory, those are all created to help us maintain GAAP, so generally accepted accounting principles, whether that be FASB or GASB, but it helps keep us in alignment, those standards and requirements. And so those are the two important questions to really think about as well when we're contemplating what expenses do we quantify as allowable when we're preparing to report out on these things. So thank you, Georgia.
Thanks, Melanie. Seeing a lot of great questions coming through in the chat box. And again, feel free to put things in there. We'll follow up with you after the webinar if we can't get to it today. So that's step one is your expenses attributable to coronavirus, not reimbursed by another source. Step two is then lost revenue. So if you have not used up your full award on those expenses, then you can look toward lost revenue. And this has been redefined and re-redefined, and where we are today is that this is the difference between 2019 and 2020 actual patient care revenue. It is reported by quarter, but they look at the full year of that revenue difference and that change year over year. And so you'll be reporting also by payer. You see in that first green box there, Medicare, Medicaid, commercial, self-pay, other, and also reporting other assistance received from these other programs related to, CARES funding, other grants, insurance awards you might have gotten, donations, fundraising, insofar as they relate to patient care. And then total calendar year expenses. And this, I think, is maybe a little bit of a remnant from, prior versions of the guidance where they were looking at operating margin. So I'm not 100% certain on how they're going to utilize that information about the full year expenses, but it is still in the reporting guidance, so something to be, mindful of and prepared for. And this is based on the full calendar year, regardless of when your particular fiscal year starts and ends. Melaney, anything else you want to add here?
Yeah, thanks, Georgia. So I think one thing to keep in mind with this is while HHS has given us this definition of lost revenue, where it being the difference between our 2019 and 2020 actual patient care revenue, currently the guidance suggests that we will be reporting this information out specifically by quarter of 2019 and 2020. So we're not, at least again with current guidance, we're not going to ourselves calculate what that difference was and report it, but we'll need to be prepared to have that information for all of the quarters of 2019 and all of the quarters of 2020 to report when that portal opens. Thanks, Georgia.
Thank you. So last but not least, there are some non-financial data elements to report. So that includes personnel metrics, patient metrics, and facility metrics, all reported out by quarter. So they're, looking at the total number of personnel by different labor categories and rehires, new hires, looking at number of patients, admitted and resident patients, looking at the number of available staffed beds, critical care, other kinds of beds. Some of these might not be relevant to your particular type of facility, but these are some numbers you can start to pull together now, even though the year is not finished out yet. Also, if there's been any change in ownership, you'll want to have that information ready, and knowing whether or not you are going to be subject to single audit. So we would like to go through some of the common questions and FAQs that we've seen. So Melaney, would you start us off?
Great, thank you, Georgia. So yes, as Georgia mentioned, the HHS FAQ, the PRF FAQ document, as of this morning is now 58 pages long. And so what we've done here is we've pulled out kind of some of the more common ones we see, and maybe even some that have had recent more clarification surrounding those questions. And I know a big question a lot of folks have had is about returning the funds to HHS. And so thinking about that, if we get to, we're okay if we get to the end of December 31st, and when we do that first reporting, if we were not able to demonstrate full utilization, we are okay, because as Georgia mentioned, we have that additional 6-month window. However, once we get to that final reporting period, so once we're contemplating our expenses through June 30th of 2021, if for some reason we're still unable to demonstrate full utilization of those funds, then we will have to return any kind of remaining funds that are not utilized. And really, I think one of the important things to contemplate with that is, these funds are federal funds, and they're healthcare federal funds, and so that 60-day reporting deadline also comes to return those federal funds within those 60 days. So it's super important to be monitoring that and following those rules and guidelines related to that 60-day time period as well, because that's going to come into play. So thinking about then all these maybe other sorts of funding sources one might have received, the PPP, FEMA, state grants, other areas. And of course, we have to ensure there's that no duplication of those reported funds. And I would say one other thing to think about with this, and it's kind of embedded in the guidance documents and other pieces, is those provider relief funds are considered really the payer of last resort. So that's where we get the guidance that we currently have is all other funding sources need to be considered and applied before we look to provider relief funds. So there's some really interesting strategy components to think about with this as far as how we're going to be attaching which expenditures to which funding source. But we have to fully utilize those first before we apply provider relief funds. So that's something to keep in mind. And the little interesting question about if your provider relief funds are in an account that is earning interest and you have to return funds, you need to return the interest as well that was received related to those funds. So seems a bit like a bit of a minutia to calculate if the situation does arise, but that is something to keep in mind if these funds were in an interest-bearing account. And thinking about general distribution funds, and we receive them kind of at a parent level, what can we do with those to get those out to our subsidiaries? So there's quite a few FAQ responses related to this, but basically in a nutshell, yes, you can distribute, allocate those at your discretion for general distribution funds to subsidiary entities, but not targeted. So be very mindful of tracking those funds and making sure you're not allocating any targeted distribution funds. And we would also say that a lot of our folks don't have necessarily a strict, easy parent-subsidiary relationship, but they have some other sort of related entity type of relationship. And really with these cases, because the guidelines or the FAQs don't really address other sorts of related entity types, is really the best course is consult with your legal counsel on this, and especially ones who might specialize more in the healthcare field. We find a lot of our colleagues are really staying on top of these, so have great resources in that way as well. And then thinking about expenses and expenditure specific sorts of questions. And what we've seen related to capital facility or equipment purchases is some shifting in FAQ guidance. But really thinking about that, like what do we do with this? Do we only report the depreciation component or can we report the full amount? So really the thing to think about from this in the most recent guidance is if the purchase was directly related, basically I'm just going to encompass this to say directly related to COVID, then the full cost of this can be applied. And there's a whole bunch of examples that goes with this. You know, we've seen the standard ones, ventilators, other sorts of capital equipment things, upgrading your HVAC equipment to take into account. Those are all good things to think about with this. But with our current guidance is, yes, if it was related directly to COVID, then we can contemplate including that with these PRF funds. And salaries and employee compensation, yep, you can. The main thing to think about this is not reimbursed by some other source or expected to be, and we have that salary cap. So cannot apply more than $197,300 in provider relief funds to any individual's salary or wage or contract labor or any of those pieces. Same thing with fringe benefits. We can apply those as well. Caveat, as always, is not reimbursed by another source. And then thinking about this allocating overhead costs. So HHS recently provided for us that if there is an existing cost allocation methodology, you may use that. But I imagine Aparna is going to cover this as well, but when we're thinking about for single audit federal funds, there is the opportunity that one can apply what's called a de minimis overhead rate, which is currently 10%. So that's something to also chat about and get some clarification about if you don't have an existing cost allocation methodology, which a lot of folks likely may not. We can discuss the 10% de minimis option. And then last but not least is thinking about our lost revenues. And we touched on this before, so how will this really be calculated? And it's looking at your patient revenue between 2019 and 2020 is how that'll be taken into account. There's some special things. I think we're waiting on some additional guidance, maybe how HHS is going to do this, but our reporting guidelines does demonstrate that it's anticipated we're going to enter our 2020 and our 2019 patient care revenues, and there will be a calculation that occurs. And of course, we all likely remember back way in the early days, there was HHS FAQ that had indicated we could use any reasonable method to calculate our lost revenues, and one of those examples provided was budget to actual. However, that is gone by the wayside. That is not an option anymore. So we have to go with the current guidance, which is we're just going to be reporting our 2019 and 2020 patient care revenue, and that's going to be the basis for our lost revenues. And then a really important one, and we had oodles and oodles of questions about this, was related to settlements or payments made that were related to patient care outside of 2019 or 2020. And HHS did provide some clarity for us with this, and that is no, we do not include settlements or payments that were not related to patient care delivered in 2019 or 2020. Another really good one has to do with fundraising, grants, and donations, and do we include those as part of revenues? The answer is yes, but here's the big caveat: if they're directly related to providing patient care. So this really has to do with what normally are your funds, your fundraising activities. For those that are directly related to patient care, yes, you can include those. You would include those. I shouldn't say can, you include those as your revenue. And with this, there could have been shifts. Like historically, 2019, you could have had different fundraising efforts that went to different activities and endeavors, but perhaps in 2020, there was resolutions or other documented judgment decisions that changed where some of these fundraising efforts were going to go and did change it directly to providing for patient care. And in those cases, the really important key is to have that documentation in order to substantiate so that whatever fundraising you are claiming really was related to patient care. And really here, if we think about it, the risk is we're not going to include an appropriate revenue. So I think that's the other flip side to think about with this is, are we really including all that we should be including? And then thinking about some of these other pieces, really maybe a big one for those of SNF long-term care is what about these entrance fees that we might charge? And yes, that would be included in those instances. And so it's not across the board for everybody. It depends on how it's set up and structured with your specific organization. But that is something to consider, that would be included in revenue. Okay, Georgia, you can now talk us folks through some of these limitations on some of the targeted distributions.
Yeah, so, this is somewhat aside from the Provider Relief Fund reporting that we've been talking about today so far, but just something to be mindful of. If you got this nursing home infection control distribution or sometimes quality improvement payment that, you might have heard of on August 27th, November 2nd, and monthly through January. I think some of my clients got another payment on November 30th and December 9th. Just be aware that the terms and conditions for these distributions, they're all the same as each other, but they're different from the rest of the distributions. And they have these 5 bullet points of, what are eligible expenses for infection control. So since these are more restrictive in the use of funds, I do always suggest that folks set aside certain expenses to kind of map to these distributions before you start accumulating expenses or determining your expenses for the more broad Provider Relief Fund reporting. So this is a good starting point if you received this distribution. Also, the Rural Health Clinic testing distribution very quietly announced on their FAQ website that there is a monthly reporting requirement where you would be reporting the number of tests performed and positives on different COVID tests. So make sure you do take a look at that portal and the FAQs. If you need some help finding those, just let us know and we can help you get there. But that's something to be aware of as well. Also, since the more restrictive use of the funds is required, you would set aside expenses for this first before looking at the broader Provider Relief Fund. So with that, we'll go to our next polling question, our second polling question. How are you feeling about understanding and applying the FAQs to your unique situation? So let us know how it's going, how you're doing with understanding these FAQs. Okay, so it looks like, most folks have a pretty good handle on the FAQs, hopefully in part due to our webinar today. Our next question, we're going to dive right into back-to-back. How are you feeling about preparing for the upcoming reporting requirements? Do you feel comfortable? Not sure yet, but you're kind of starting to work on it, get your spreadsheets together, or not feeling so comfortable? And we'll give you a few minutes to answer this. Remember, you'll need 3 out of 4 questions today to get full CPE credit.
So if I may, this is Melanie.
Okay.
There was one question we had seen related to, do we use accrual or cash base for the reporting requirements? And just really quickly, you will use whatever basis is your normal reporting. So for a lot of folks, it's most likely accrual basis, and that will be what you will use for the PRF reporting. Thanks, Georgia.
Thank you. So from here, I'm going to hand it off to Aparna to talk about the audit requirements.
All right, thanks, Georgia. So right off the bat, I wanted to share some kind of recent breaking news. I'll start with the caveat of we still haven't seen this in writing, but this is what we're expecting to see. The AICPA had recently done their kind of update presentation on the compliance supplement addendum. And for those of you that have been following this, we've been waiting for this document to release really all of the last couple of months, because it's got the audit requirements of how to do the audit of the PRF funds. So we're hoping to see the addendum any day now. And, hopefully what I'm going to tell you will be confirmed there. But generally, there's a couple things I wanted to bring to your attention, which is, which are, I think, some good news to share. One is we're expecting to see in the addendum a 3-month extension on single audit due dates. There's, I think on the AICPA's website, there's a good graphic about this, but just as an example, for those of our organizations that have a June year end, for 2020, for those that would have that do have a single audit requirement already in place, normally the due date to complete that single audit would have been by March 31st, 2021. So that's typically 9 months after the fiscal year end at the latest that the audit can be completed. That deadline has now been extended to June 30, 2021. So it's basically now a full 12 months that are now available to organizations to get the single audit completed. This is kind of, we're expecting that this is going to be really kind of a blanket extension. So, to the extent you have federal agencies that are not HHS or other, other departments, you're not going to have to kind of reach out and confirm with them that you have this extension. This is automatically being granted to all the organizations. The other big change is actually the timing of the single audit requirements for the Provider Relief Fund. Up until this draft of the addendum we heard about what's going to hopefully be in the final version, we had all kind of understood that for fiscal year ends that are prior to December 31, 2020, they would be the June year ends, and between them and 12/31, they would be kind of the first organizations to have to deal with the Provider Relief Fund being audited as part of their single audit or program-specific audit. We're expecting to see in the addendum that really the audit requirement for these funds is going to be triggered based on the December 31, 2020 calendar year reporting that's being required. So what does that mean? It means the June 30, September 30, any fiscal year ends from between June 30 and 12/31, your audit requirement is now going to likely be in fiscal 2021. assuming you don't have any other federal funding outside of the Provider Relief Fund that may trigger your audit requirement. So the December year ends are going to be kind of the first organizations that will have the single audit requirement kick in, and then it trickles down from there to the other fiscal year ends. So this is definitely late breaking news. I think it's helpful to hopefully have this clarity confirmed once we see that addendum, but definitely I think good news because it helps organizations focus on the reporting, and really what's being reported is effectively going to likely be what's reported in your schedule of expenditures of federal awards. And so it's helpful to have to go through the reporting process first before having to compile the expenditures for the SEFA as well. All right, so just high level, and I've seen a few questions around this in the Q&A, but there are going to be differences in reporting. You know, there's the financial reporting aspect of it, and you know, under generally accepted accounting principles, while we're using the reporting specs that are available as kind of a guide of, okay, based on, you know, does an organization have, you know, the healthcare expenditures attributable to COVID, and then do they have the lost revenue? You know, the conclusions you may come to there from a financial reporting context are likely going to be different, because that context is really about, you know, based on this information and not knowing the specifics beyond what's in the reporting document that we have so far of how this reporting is going to look. You know, it's going to be kind of your best estimate of, okay, based on that, you know, I think I have sufficient expenses and lost revenue to recognize the Provider Relief Fund as revenue in the current fiscal year, or there may be a portion that could get recognized as deferred revenue. And given the 6-month window after 12/31 to kind of spend those additional funds, you know, any potential recognition of a liability that may need to be returned back to HHS, that really would come kind of after that second reporting period. So there's going to be, you know, for those organizations that have had the June year ends and, you know, the September year ends, you know, there's more, the reporting, the financial reporting is really more of an estimate at that point in time, given the information available. The reporting to HHS, as Georgia and Melaney have been talking about, there's going to be a lot there that has to be, again, that's going to be different from what you would have in your financial statements, because the specifics of it's got to be net of any other reimbursable source for the expenses, and the lost revenue, you know, talks about patient care. So not all operating revenues that you may have on your financial statements would be considered as part of the reporting. The schedule of expenditures of federal awards, or the SEFA, again, this is now, given what I was just telling you about the delay potentially of the audit requirement, this is not going to have really expenditures that kind of mirror the reporting that's going to happen. And from a timing perspective, those are going to be expenditures that may span a couple of fiscal years for some of our organizations. And there are times where the SEFA, the expenditures reported in the SEFA may not match what's in the financial statements. There can be situations where they're potentially cash basis as opposed to accrual basis that is reported in the financial statement. So it's there are going to be, you know, I guess at the end of the day, we're going to have to be comfortable with the fact that there are going to be some differences, and hopefully once the first round of reporting at least is done, that will provide, you know, some additional clarity on how the financial statements need to be trued up potentially, given new information that's available to those fiscal year ends that have already reported on the Provider Relief Fund from a revenue recognition perspective. Even with our fiscal year ends, there's, you know, the June year ends as opposed to the September 30 year ends, there likely could have been kind of different conclusions on the revenue recognition. So we are seeing a lot of differences in some of the conclusions being reached. And again, it's based on, you know, the guidance is still not 100% clear, 100% specific enough that makes it pretty straightforward to be able to recognize the revenue. So just some things to keep in mind. All right, so this is just a high-level snapshot, again, of the audit requirements. So really the threshold, and I think somebody had asked this question too, the threshold for whether or not a single audit or a program-specific audit could happen is if an organization expends $750,000 or more in federal funds. And so the program-specific audit that I mentioned, if the Provider Relief Fund is your only federal program, there's no other federal programs, even if you get a very small dollar amount in relation, then you would have that option. Otherwise, it would be a single audit. There's some options for for-profit entities to have a financial audit done of the program funds in accordance with generally accepted government auditing standards. As I mentioned earlier, we're expecting to see that compliance supplement addendum any day. So hopefully we'll have better clarity on the audit requirements beyond what I'm discussing here. All right, so this is this slide is really kind of a text version of the graphic I just showed you. So I'm just going to kind of keep going here, but please just submit any questions you may have as you're listening in and reading in the slides. All right, so for those that are familiar with how a SEFA is prepared, this is probably going to be reminders for you. But for those that may be new to this, and I have an example of what the SEFA looks like in the next slide, but one of the things that's being asked in the compliance supplement, the compliance supplement that's already been issued, any COVID-19 related expenditures, whether it's a new program or it's incremental funding on an existing program, when you're preparing the SEFA, they need to be identified separately with COVID-19 as part of the description of that program. In terms of kind of support for how the SEFA is being prepared, it's going to be important to document the judgments and assumptions made and what qualifies as an expenditure. And I think this will become a little bit easier, hopefully, given that the audit requirement is kind of getting connected to the reporting with the PRF. And so, once the reporting piece is, you've gone through the exercise of pulling all that data together, hopefully it translates well to what needs to go into the SEFA as well. Generally for grant or expenditure recognition for grants, it's really when the transaction occurs. However, in the Provider Relief Fund world, that's not going to be as straightforward because we're talking about, incremental expenses that are attributable that you need to consider. What other reimbursable sources are there? Lost revenues, those are really not transactions that have occurred because, it's called lost revenue. So there's, how do you correlate that back to this translates to an expenditure, and what does that need to look like on the SEFA? And again, hoping that the reporting will provide further clarity on, what that dollar amount would be that would need to be included. And then lastly, again, as we've been talking about, there are the other sources of funding, and I think as George and Melaney have mentioned, the Provider Relief Fund is meant to be the payer of last resort. So, with the expenses and with the lost revenues, still considering, did we get PPP loan? Did we get FEMA grant? Did we get any other grants? All of those need to be considered before you would look at what's left that could be applied against the Provider Relief Fund. So this is really going to impact what should be recognized in the SEFA as expenditures for the audit requirement purposes. All right, so this is just a visual of what the SEFA would look like. This particular graphic just shows some of the common CARES Act related funding that's come across. Some of it is specific to healthcare organizations, some of it's not, but these are some that we expected to see. So I just thought it would be helpful to show kind of a visual of what it would look like and how that would need to be reported. All right, so compliance requirements, and again, this is subject to change until we see the addendum in writing. However, we're expecting to see that for purposes of auditing the Provider Relief Fund under single audit requirements, there's really going to be kind of 3 compliance requirements that are considered directed material. So these would be when we are auditing the program, we would be focused on these. And so they are activities allowed or unallowed, allowable costs, cost principles, and reporting. The first 2 are really intertwined because it's really about what are those qualified expenditures, whether it's incremental healthcare expenditures attributable to COVID or the lost revenue piece of it. Are those allowed under the program to be claimed against the Provider Relief Fund. So again, some of the things here that we would be, testing is, do they meet the criteria of being allowable, and, do they meet kind of the reporting specs of being net of other reimbursable sources if it's the expenses, and, from the lost revenue perspective, does it kind of follow the formula that's being provided on how to calculate that lost revenue? So again, documenting as much as possible here in terms of what are some of those assumptions and judgments that were made in calculating these amounts will be key. And then the reporting, that's going to be obviously what gets reported to HHS as part of the kind of the 2 rounds of reporting that's being required. So again, testing and auditing how that was compiled and how, just complying with the reporting requirements. These other ones kind of in the bottom half of the slide, while we don't expect them to be direct and material, they could come into play as we're auditing the direct and material requirements. And so in terms of allowable costs, does an organization have in place kind of policies and procedures to check that the vendors that you're using are not on the suspended and debarred list, right? So there's a list, and we can get you the link to it after the webcast here, but, checking that the vendor is not barred from receiving federal dollars. There's various reasons that could happen, but, that could often be a potential issue of compliance if there's vendors out there that may be on that list. Subrecipient monitoring, so not sure how common this will be, but there could be organizations out there that have received provider relief funds and passed that through to other organizations, and making sure there's a good process in place to monitor that the subrecipient is complying with the various requirements that we've been talking about. If they need to be getting that audit done because they meet the threshold for getting the audit done, then ensuring that those are all being addressed. Again, there's going to be key to make sure that all of that's being documented and appropriately demonstrated that process was happening. The other one is program income. I think HHS has been pretty clear on if the provider relief funds are earning any interest in the interim while organizations are working to spend it. If there's a potential situation where those would need to be returned, then any interest associated with those funds would also need to be returned. So there could be instances when we're doing the audits where that could be the case. So again, that would be something that we would need to audit and make sure was complied with as well. Other audit considerations. So internal controls, part of the single audit, there's definitely a huge focus on internal controls. And, for those organizations, again, that have routinely had single audits, this is not news to you. But, generally, it's expected that organizations have controls in place that are compliant with either the Green Book, as they call it, which is the internal controls in the federal government, or a lot of you may have heard this more frequently, the internal control framework issued by COSO. What makes this challenging for the Provider Relief Fund is there's been such a gap in when the guidance was issued on how these funds could be used relative to when the dollars were actually paid out to providers, that a lot of this is now looking back and saying, okay, what did we have in place to try and monitor this, or what guardrails did we have in place? And so, as I've been saying, just, document everything that you can and do it real time as much as possible, because that'll really help support, there may not have been, controls A, B, and C in place specific to the Provider Relief Fund, but, being able to fall back on some of your more general financial close and reporting controls of how to track some of the expenses and how to track, the cash being spent, just leveraging that as much as possible. A couple of examples would be, what are some of the planning that was done for like the PPE and other supplies. There was changes needed to be made to the staffing, et cetera, like kind of documenting all of those processes. For those that did receive other funding, such as the PPP loan, what are you doing to ensure that expenditures are not being double counted, so you're not having the same set of expenses go against 2 different funding sources? Those are a couple of examples of what would be key to document that you're kind of making sure these are all being done to comply with each respective program. All right, so I think we have our last polling question here. It's, are you on track to demonstrate full utilization of your Provider Relief Fund by December 31, 2020? I think one thing in looking at some of the questions really quickly is, for those that did receive the PPP loan, while that is from a federal agency, the SBA has said those are not subject to single audit requirements. So when you're considering whether or not you would meet the threshold for a single audit, or what you need to be reporting on your SEFA, the PPP loans would not be part of that. All right, so it looks like our results of our poll, I am not surprised by these results. I think a lot of us are in the same boat of the reporting information is definitely confusing, and we're really hopeful that there will be further guidance soon that will, make this a lot easier. All right, Melaney, I think it's back to you.
Great, thank you. So just as a little wrap up, thinking about just some pending clarification elements from HHS is one question we get frequently, and I know is out there, I believe is out there to HHS, is whether we're going to consider regular patient and payer reimbursement versus only COVID-related supplemental payments netting against step one expenses. There's a little bit of confusion and discrepancy, but the current guidance reads that all sources of revenue that would mean the regular patient and payer reimbursement currently should be included in that step one of looking at your expenses and offsetting that with other sources before taking a look at your PRF. And of course, a really big one is really what in the world is this portal going to look like, and what's going to be our instructions for reporting funds, because right now we're all going off of the November 2nd guidelines document, but really will be nice to know, to have that comfort of really what is HHS going to have us do for those. So just a couple things on the horizon, and of course there's a whole other slew of clarifications. But Georgia, did you want to talk us through some of the best practices to think about in our last short time together?
Sure. I know we're at the top of the hour, but just in general, creating a GL code related to COVID-19 is important, and developing a master tracker, a place where you have all of your awards in one place, all of your, how you're expending it, whether that's towards specific expenses or lost revenues, but just kind of keeping track of that in one central place that you can sort of logically understand that you're not duplicating the expenses across different funds. It's been really helpful. We've been working with tons of clients, helping them develop that and give them feedback on their trackers. Of course, keeping records of the guidance that you're using, because those can change. The websites change day to day, and you might lose your guidance. And retaining your records, and of course just standard accounting best practices, keeping your documentation, keeping your meeting minutes and receipts and all that. So here's just a little screenshot of a master tracker example. When did you get it? Who did you get it from? How much did you receive? And what are the eligible expenses? What reporting do you need to do? Just having that in one place, I've found clients feel, really relieved when they do put it all together in one place, to have a, kind of comprehensive story they can tell about their funding. And I just want to remind you all that, we're here to help. Of course, we conduct the audit and can help you with the single audit. Can help assess your supporting documentation so that you're ready for your audit if, maybe it's being done even by someone else. We can provide you with guidance related to the reporting and FAQs that are out there, or connect you with, someone that might be able to help you from a legal perspective. Help get you ready, provide technical assistance. And we also work on FEMA and other grant applications. So there's lots of grants, research opportunity grants, and state and other agency grants that you might qualify for. So if you want to talk to someone about that, we can certainly help you in that department. We have some resources in our slide deck. You'll get that when it's distributed. There's some links here at the end. And of course, our contact information is up here on the screen. If you want to reach out to any of us, you're more than welcome to. And if we didn't get to your Q&A, you'll be hearing from us soon.
Thank you, Georgia. And thank you to Georgia, Aparna, and Melaney for a great presentation today. As a reminder, if you attended today's presentation in a group and would like to receive CPE credit, you must complete the group attendance sheet found in the slide deck and handouts window. If you participated as an individual and met all certification requirements, your certificate is available to download now in the CPE progress window. I'll keep the webcast console open for a few minutes to give you time to download this. Also, a copy of your certificate will be emailed to you within 3 weeks should you have difficulty downloading it now. Here is a link to our online survey where you can provide feedback for today's presentation. Please take a moment to complete this survey as your feedback is very important to us. And thank you everyone for joining us today.